Welcome to today's webinar, Relationship Management Update. Our webinar today will run for approximately 60 minutes. The first half hour will feature a presentation from members of SRA staff who will introduce themselves to you shortly. In our Q&A session, we'll open the floor to questions and comments from you. I'll now hand you over directly to today's SRA presenters, Martin Durden and first, Amanda Norton.
Thank you for joining us, everybody. Today we're putting in the spotlight the SRA's approach to relationship management as a form of supervision. My name is Amanda Norton. I qualified as an accountant in a top 10 accountancy practice, and I've been working in legal regulation for the past 14 years in a range of roles, including previously being a manager in forensic investigation. And I think that goes some way to explaining that horrendous photograph that you can see there on your screens now. I joined the relationship management team a year ago and have been working with firms developing the SRA's approach to engagement, as well as internally building processes and policies to support the relationship management function. I have with me my colleague and partner in crime, Martin Durden.
Good afternoon, everybody. Like Amanda, I've been with the relationship management team since the beginning of the pilot. But previously to that, I'd spent 16 years as a forensic investigation manager, having a considerable amount of experience in regulatory matters to do with the SRA. Prior to my time at the SRA, I was an audit manager with Baker Tilly Chartered Accountants, where I carried out a great variety of work. During that time as well, I had a period in industry where I was a group accountant in a public company, and I worked on mergers and acquisitions at varying times. Right, here we go.
Thank you very much, Martin. So just a little bit of information for you about the format that this webinar is going to take this afternoon. We'll give you a presentation lasting about 35 to 40 minutes. You'll be able to download our slides from our website, so there'll be no need for detailed note-taking. You can sit back and relax and listen to us talking. And at the end of our presentation, we welcome your questions and comments, which can be made either by phone or by text box, and you'll be given some more information about how to do that at the appropriate time. We're really interested in hearing your views, and we'll be inviting you to take part in some mini polls during the webinar. If you have any other comments, we can be contacted by email at relationshipmanagement@sra.org.uk. This is one of a series of webinars which the SRA is hosting. We're fairly new to this kind of engagement. Some of you may not have taken part in a webinar before, and we really welcome your feedback. You'll be able to find recordings of this and other webinars covering related topics on our website, and we're planning some future sessions, so please keep an eye on the website for details and mention this to colleagues. Our aim is to help those whom we regulate understand and prepare for the fundamental changes to our regulatory approach, which is happening over the forthcoming months. We think that webinars are an accessible and cost-effective way of having a dialogue with you, and much easier perhaps for you to get to than traipsing across the country to the roadshows. And webinars are now firmly part of our communications and engagement strategy. Now I'm going to hand you over to Martin, and he's going to give you a recap on the relationship management pilot.
Thanks, Amanda. The concept of relationship management as a supervision tool can be traced back as far as the Hansen report on good regulation in 2005, and which was subsequently taken up in the reports by Nick Smedley and Lord Hunt. But the senior management team at the SRA, when putting together the plans for supervision under the new OFR, decided that relationship management would be piloted as the key element of that supervision structure, and especially with regard to high-impact firms. To test the effectiveness of the relationship management pilot, a pilot scheme was instigated, and that started back in September 2010, and it's only just within the last month finished, and that's on the 31st of July. We were tasked with answering 4 questions, and the questions that were put forward for us to be answered were whether it was proportionate to supervise firms using dedicated staff or teams, whether proportionality arises from the likelihood of an identified regulatory breach occurring, or from the impact that such a breach would have, or a combination of both, whether there is a need for specialist supervisory expertise to understand the business model of certain firms, and the potential decision-making criteria for applying dedicated supervisory resource to particular firms. After various consultation papers, we had volunteers from 60 firms who indicated their willingness to take part in our pilot, and that given the amount of resource we had to spend on it, we could only select 19 to take part. The 19 we selected were a complete range of firms, over the complete spectrum of firms of solicitors, from the largest global practices down through large national companies, high street practices, and down to sole practitioners. But also, the sample that we chose was also done to reflect other more unusual business models, to include things like virtual firms and other niche practices. So, what is relationship management, and how have we approached this task? The most important point to make is that relationship management involves the employing of dedicated resources in supervising a firm, and it allows a single point of contact within the SRA. Initial contact with the firm was by meeting, where the relationship management team would gain as much background information concerning the business model, governance structure, approach to risk, and an overview of the compliance procedures. Subsequent meetings would involve typically concentrating on areas the firm considered to be high risk, to ascertain their plans and procedures in place that help mitigate those risks where appropriate. We would also focus in on particular areas of concern to the SRA. Where firms in the pilot have not carried out a risk assessment, and there were a handful of these, with the input of the relationship management team, the firm involved were encouraged to consider these risks and how they might combat them, to put it down in a regularised table, to be able to have a working document that would go through the process to help them mitigate any risks they were. But the work of the relationship manager since September 2010 has not been confined to that just of the pilot, but we have expanded it to encompass certain areas of concern and inspect the SRA's regulatory objectives. And I just pointed two of these areas, but the two areas that we've looked at include things like financial stability and outsourcing. The financial stability work was prompted in part by the demise of a high-profile firm, and of course the other thing, of course, is the poor economic climate. Relationships management staff drew on the financial knowledge, and you'll note that both Amanda and I have accountancy backgrounds. We have that knowledge to look at the firm's past trading position, future, and cash flow forecasts, etc. Another area, as I already mentioned, was outsourcing, which is an area I think it would be safe to say that has not actually exercised the SRA's mind too much in the past. However, the teams that we've had out have engaged with a number of firms going through these processes to see how they were outsourcing, what resources they were using, and the effect that it had on regulation. And we could then take forward and get a general view from the SRA to work forward. I'm now going to turn to what actually did we find when we did these pilot visits. Well, pilot having now finished, we're in the process of submitting a report to the senior management team regarding the findings of the pilot. My colleague Amanda will be referring to it later. But I think the feedback that we've had has been extremely positive from the firms involved, with a recurrent theme being that it helped those firms who had not sufficiently addressed the risks of issues of risk. But probably the greatest advantage seen by firms was the dialogue struck up with the relationship management team that led to a number of dialogues with the SRA, facilitated by the relationship management team, allowing issues to be resolved as simply and as directly as possible. From the SRA perspective, relationship management has allowed it to elevate the subject of risk and compliance up along the firm's agendas, whilst building a proactive relationship with the firm. In addition, a detailed understanding of market sectors has been gained, which has allowed us to fully understand firms. In the past, it was a long-term criticism that the SRA simply did not understand what it was like in practice, and the relationship management process has gone a long way to addressing this. What has come out of the pilot is that it's in the global, national and large firm arena that require the most time and resource allocated, given that any issues arising tend to be of a more complex nature. While smaller entities have been positive regarding the pilot, there is less evidence, I'm afraid, to support the use of relationship management in the small and low-impact firms, mainly due to the level of resource that would be required to undertake the work when balanced against the SRA's regulatory objectives. What I'm now going to do is to go through what relationship management is in practice. As I've already highlighted, relationship managers have been actively engaging with firms regarding a wide range of issues. It's important to emphasise, though, that whilst approaches and interpretation of the new handbook have been discussed with firms, we cannot provide safe harbour advice to firms. The relationship managers within the department have a strong understanding of the sector we regulate, and we can assimilate the best practice where it can add value to the regulatory process. Working with other units within the SRA, a one SRA approach has been fostered within firms, and they found that useful and constructive. But I'd now like to give you an example of just how relationship management has been used to address compliance issues at a firm within the pilot. The example I will give concerns a firm who was a member of the pilot. During that pilot period, we received a qualified accountant's report. But the previous procedure would have involved a full forensic investigation being undertaken with all the upheaval that would cause to the firm. And the use, I might also add, the use of the resource of the FI team. Any FI report that had been produced would have been most likely been referred for adjudication, depending on the scale of the breaches. Under OFR and relationship management, the allocated manager engaged with the firm to ascertain the history of the SR breaches, and having ascertained the breaches that have been identified by the firm and procedures been put in place to ensure they not occur again, and any shortages have been quickly replaced, a timetable was agreed with the firm for compliance, which would then be periodically monitored by the relationship management team. The timetable and compliance programme was agreed between the firm and the relationship manager, and the decision taken, given that the actions taken by the firm, that no further action would be taken. This approach was and is in line with the principles of OFR and produced a saving of resources for the SRA whilst achieving its regulatory objective. The firm was saved the necessity of a forensic investigation. But it is important to note that had that firm failed to achieve compliance or failed to stick to any of the agreed timetables, then the relationship manager would have passed the matter on for further regulatory action. So there we have an example of what relationship management is like in practice. I'm now going to go on for a polling question, and I will afterwards hand it back to Amanda. But the question I'm going to put forward to you as a polling question is, and I think it's just come up on your screens, do you think that relationship management is a worthwhile approach for the SRA? It's now time for you to cast your vote, after which time I'll tell you what the result is going to be, and I'll pass you back to Amanda. Well, results are still coming in, and it looks like Amanda and I have still got a job.
This is good news.
At the moment, we are looking at about a 95% saying yes, it is a good idea, and certainly the SRA management team will be very happy with that. Let's seems to be... oh, they're still going. I do know that after I said that comment about having a job, it went down afterwards. Okay, I think we've got the general indication that a vast majority of the people there think it's a good idea. So thank you for participating in that. I'm now going to hand over to Amanda, who's going to carry on that polling question, and I'll pass over to Amanda.
Yeah, thanks very much, everyone, for answering mainly in the yes there. We'd like to just drill down a little bit more with our second polling question to try and understand a little bit better why you might have answered yes and no. So here we have poll number 2, and if you did happen to answer no, there's a further question coming up, so don't worry, we're trying to cater for you as well. So for this one, if you answered yes to the first question, which of these options that we've got here do you think best relate to what you were thinking when you answered yes? If you are answering other, so there's other reasons behind your yes vote, we really are interested in hearing what they may be, and so we really would like you to email into our relationship management email address, which is relationshipmanagement@sra.org.uk. Just whilst you're all busy clicking away there, and thank you very much for responding to our question, I'd just like to mention that we are experiencing a little bit of unexpected background noise, for which we apologise. So we'll try and keep our own volumes up so that you don't get too distracted. Okay, that's great. Better communication with firms is certainly what one of the things that we're aiming to achieve with relationship management, so that we can be much more proactive in the way that we approach the profession and interact with the profession. We're also hoping, obviously, to ascertain more risks that are out there and certainly pick up on emerging risks. I'm going to talk a little bit more about risk in a moment, and certainly about impact as well. That's really good. Looks like most of you have finished, so I'll move on. Shall we move on now to our next polling question, which will give the no voters an opportunity to have a go. So I'm just waiting for that to come up onto the screen. Here it is. So if you answered no to the first question, could you indicate whether that's because you already have a risk and compliance department and you don't think that relationship management can really add anything? And similarly, if you're answering other there, then again, we would really like to hear from you as to what your reasoning is. So once again, I'll give you our relationship management email address, which is relationshipmanagement@sra.org.uk, and we look forward to going through those emails later on. Okay, that's great. So you think we're going to be intrusive and an added burden? Well, we certainly will feed that back. Obviously, it's not our intention to be particularly intrusive or an added burden to firms, and we're hoping that by being proactive in our approach, that we would perhaps be able to add value to compliance functions within firms or help with the implementation of OFR. But of course everybody's entitled to their opinion, and we do realise that the SRA is not universally loved. Okay, I think people have pretty much finished voting there, so I will carry on and explain what we're going to do going forward with relationship management. As Martin's already mentioned, we've compiled a report on the experience gained from the relationship management pilot. This report will be discussed by our senior management team and the SRA's board, and key decisions will be made later this month. We're aiming to publish the report in due course on our website. So whilst some key decisions are still to be made, we are clear that relationship management as a method of supervision will continue, and it will continue with those firms the SRA assesses as being high impact. I'm going to talk a little bit in a minute about what that means. But just to say that those firms who are assessed as medium or low impact will be supervised by the other supervision team, who will be using a combination of desk-based and visits to firms. They have been carrying out a separate pilot to go alongside the relationship management one. So when we talk about impact, we mean the impact posed to our regulatory objectives should something go wrong with a firm. I thought it might just be useful to refresh your memories as to what our regulatory objectives are. They're set out in the Legal Services Act. There's 8 of them, and they are protecting and promoting the public interest, supporting the constitutional principles of the rule of law, improving access to justice, protecting and promoting the interest of consumers, promoting competition in the provision of services, encouraging an independent, strong, diverse and effective legal profession, increasing public understanding of the citizens' legal rights and duties, and lastly, promoting and maintaining adherence to the professional principles. And you'll perhaps recognise many of these objectives from the existing conduct rules and obligations, and also as being reflected in the new principles. But I want to stress that because the SRA regards a firm as high impact doesn't mean it's necessarily very risky in the way that it deals with clients and runs itself as a business. A high or low impact score is not an assessment of the risk posed by a firm. Risk is considered in terms of both impact and probability. So a firm's impact score is separate from any assessment of the likelihood of issues arising in that particular firm. And the reason that we're using an impact score is a method for us to allocate our supervisory resources as much as anything else. So the primary factor in determining the impact score is the size of a firm, and this might be measured in a number of ways in terms of turnover, individuals working at a firm, numbers of clients, numbers of transactions. And the SRA makes use of a combination of existing data held about firms to assess their size. We also consider whether a firm holds client money, as this increases the potential for detriment to clients. And then lastly, we look at the types of work undertaken by the firm. So work with clients in a particularly vulnerable position, for example, mental health or immigration cases, or for less sophisticated clients, which captures the distinction between a typical residential conveyancing client and a corporate client, for example. Now, our experience in the pilot has shown us that many high-impact firms devote a lot of resource to compliance and risk management functions that mean those firms, while still having a potential high impact, are able to mitigate the likelihood of a risk crystallising. So the SRA is clear that supervision of firms will be risk-based, and this means that in relationship management we'll be focused on working with firms to assess risks both to the business of the firm and to our regulatory objectives. We'll be focusing on those risks within a firm that relate to our regulatory objectives. This means that the extent to which we interact with high-impact firms will vary depending on the circumstances of each firm. Where we can see that risks are well controlled and mitigated within a firm, it's likely that we would meet less frequently or engage in a less direct manner. So perhaps we'd have a phone call with the firm every 3 months, whereas with firms where we see higher likelihood of risks occurring or more complex issues, we may meet at the firm and perhaps on a monthly basis. So we aim to be as flexible and responsive as possible so that we're able to flex our approach according to the risks posed by the firms that we're looking at. One of the other benefits to the SRA, which we learned from the pilot and which we'll be building on going forward, is in feeding back developments in the legal profession and in some surrounding commercial drivers to our risk centre and policy teams. And this means that our risk profiles will be updated for current events and developments, and we'll be able to capture emerging risks. In other words, we'll be able to be much more proactive in our assessment as a regulator of what's actually happening out there in the profession. It also means that we can develop policy with a background of practical knowledge and a true assessment of the implications for the profession with the involvement of the profession. And we're clear going forward that we have to be accountable for our work, and we've already built in validation and quality control processes, and we'll continue with these. We're aware, very well aware, that supervisors in other industries have come under scrutiny for recent failures, and we'll be building in a variety of measures to our work methods to ensure we avoid regulatory capture. So let's move on and have a look now at what we're doing practically to take relationship management forward. We're in the process of building up our team and expanding in advance of the implementation of the handbook from the 6th of October this year. Now only a few weeks away, let's not forget that. So we're undertaking a programme of internal and external recruitment to build on our current team of diverse skills and experience. So our existing small team is building on the work that we've done in the pilot, and the engagement with firms continues. Indeed, we're engaging with more firms as we prepare for October the 6th. We anticipate that we'll be engaging with firms who fall for relationship management on a phased basis from October onwards. So that brings us to the end of our session, and it's going to be over to you now for questions. And little plea from Martin and I, nice ones only, please. Okay.
The presentation element of today's webinar is now complete, and we're about to begin our question and answer session. You can now submit text questions and comments using the box provided on screen. Alternatively, to ask a question or make a comment by telephone, if you have not already dialed in, please dial 020 3159 9716, type "I want to ask a question by telephone" into the Q&A box, and stand by to be introduced by the operator. When prompted, please enter the PIN code 241377#. These are the same as in your webinar joining instructions email. Make sure you type "I want to ask a question by telephone" in the Q&A box, and you will be introduced by the operator when the presenters are ready to take your question. Now, back to today's presenters.
Okay, well, one question that's come through, and I shall pick this one up, is how often can we expect to receive visits from you if our firm is in relationship management? Well, that is it's quite a difficult answer to give, because what we're trying to do is that it is not a one-size-fits-all relationship management. A lot will depend on what kind of processes you have in place, how well these are being run. It may well be that if you have completely excellent systems and everything is being mitigated, but it may well just go down to being a telephone call once every month or 2 months. I mean, that obviously doesn't stop you picking up the phone if you have a particular compliance issue that arises in the meantime, and we'd be more than welcome to talk to you. But if there are firms that constitute a little bit more of a risk to us, we will then spend a little bit more time looking at. And also, a lot depends on the complexity of the issues. So.
Thanks, Martin. There's another question that's come in here, which is how time-consuming is it going to be for a firm in relationship management? Well, it's clearly going to be difficult to predict, as we do want to flex our approach depending on the nature of issues that we find in firms. But what we found from the results of our pilot is that meetings of sort of 2 to 3 hours in length tend to work best. That initially the time that we spend might be a little bit more intensive, because we need to get to know you as a firm and what your governance and control mechanisms are, what your risk and compliance processes and procedures are in the firm. But once we've done that through perhaps 2 or 3 meetings, then we'll be able to sit back and take stock of our assessment of risks posed by your firm, and then we can sort of phase down the intensity of our engagement. So perhaps we might look to meet quarterly or every half year, or perhaps engage with you over the telephone. Okay, Martin?
Yeah, I have a question here from Nikki Shepherd. Hello, Nikki. The question we have from Nikki is, how will the introduction of relationship management be phased in, and what criteria will be applied as to the selection? Well, this is very much down to the senior management team looking at the report that we've prepared for them. As I say, everything is categorised into high, medium and low risk. and it is really where the bar will fall as to what characterises what high risk is, which will mean how many firms will be in. So, as I say, the chief criteria is the size of the firm and the client monies, etc. So the bigger the firm, the more likely you are to be in it. But until we actually know where the bar will sit, we do not know how many firms will be in relationship management. That's about as far as I can go at the moment.
Okay, yes, I've got a question here which is about what the position might be for small and medium firms, and I think what we're thinking is that because of the way that firms are going to be impact scored and the factors that will feed into the impact scoring, it's likely to be that smaller and medium firms are more likely to be assessed as representing medium to low risk. That's risk to our regulatory objective, as I was saying earlier. So they, whilst they won't be necessarily relationship managed, they will still be supervised, and the intention is that there will be some form of point of contact for those firms at the SRA to should issues arise that you want to contact us about. So it's not the case that it's just larger firms who will be receiving resource from the SRA. It's just that the resource that's given to them will be in a different form in terms of relationship management.
A question here, I haven't got a name on this one, but it says, can you tell me what your first contact might be with a medium or low risk firm, and when this might be if it wasn't triggered by the accountant's report? Well, first of all, there's a couple of issues here. The accountant's report was just one instance that I came across and I've let you know about. There are a number of reasons why we might be looking at a firm. But first of all, I think the other element of this is whether it's a medium or low risk firm. Relationship management is specifically designed for high impact firms. So it is less likely for us to be involved with the medium or low risk firms. However, that's not to say that you're just going to be left alone. We do have a supervision department who will be, as Amanda has already mentioned, will be using a combination of both desk-based and sort of visit-orientated work to look at you if something crops up that needs looking at. But that won't be a relationship management type visit.
Thank you, Martin. I have another question here which is asking, will all firms receive relationship management of some type? And I think the answer to that is no. We simply don't have the resource to relationship manage the nearly 11,000 firms that there are currently in our regulatory pot. So we are going to be assessing the impact to our regulatory objectives that firms represent, and relationship management will be dealing with those firms who are assessed as representing the highest impact. So other firms will fall for the other types of supervision we've discussed already this afternoon.
A couple of questions here that have come in. I'll put the two. They can be answered quite quickly. I mean, can you provide a bit more detail on what you mean by safe harbour advice for law firms? As you know, the handbook is coming in on the 6th of October. The whole idea of the new handbook is that it is a much more sort of outcomes-focused and prescriptive rules. What we cannot do as relationship managers is give you definitive SRA-based gospel answers that can be quoted back. What we can do is help to discuss issues with you and help you to make your own decision about whether that is in accordance with the new handbook or not. Another question that's come through is regarding specialist conveyancing firms. Will specialist conveyancing firms generally be designated as high impact? The answer is no, unless they are of sufficient size to make them fall into the high impact size. However, there will be, going on to the supervision area, there are a number of issues. One of the things that will trigger a thematic issues that are cropping up, and I know that conveyancing is one of them. So it may well be that you see some involvement with supervision on a visit basis to discuss conveyancing. The answer, will you be primarily the point of contact in the, will your primary point of contact in the firm be with the CULP, or will you expect to meet with a range of partners, directors, staff? Well, we have normally, when we've engaged with firms, yes, we have a single point of contact, but it is important to get to know that firm, and we in fact will meet with a great variety of people from who deal with conflicts on a daily basis, people who deal with the IT and the security of IT, right the way through to the accounting staff. So yes, there is a point of contact we'd like to work with, but no, we don't stick to just one person. We'd like to see a full range of people.
Okay, I've got some questions here. The question is, will we be informed of our risk level even if we don't enter into relationship management? Well, going back to talk about our impact scoring, again, this is distinct from an assessment of the actual level of the probability of risks occurring within a firm. This is a way of us being able to rank firms in terms of the impact that they may have to our regulatory objectives, which in turn will allow us to divide up our resources into the appropriate places. So we aren't intending to publish those impact scores. Part of the reason for that is that they are purely to be used for internal purposes, for determining our resources, and also for determining which form of supervision will be applied to firms, but also because they will change fairly frequently. There will be, the impact scoring is going to be done by our risk centre, and that will be updated as and when more information comes in about different firms. So it could be quite a fluid process. So we're not intending to inform anybody, any firm, about their impact score. Of course, if in due course, as we phase in our relationship management engagement with all the firms who fall into our relationship management pot, you're telephoned by myself or Martin or one of the other members of our team, then you will know that you're in relationship management. But we are going to be engaging with firms in a phased way from now onwards.
Okay. Question from Emma. Welcome, Emma. Does a firm holding the Lexel accreditation and CQS affect their impact assessment? The answer is, with regard to the impact assessment, no, it won't affect it. However, it will affect the type and length, or it could well affect the type and length of the engagement once taking place. If you've got the Lexel accreditation, CQS, it rather sort of follows that your firm has taken very great care in compliance, etc., and probably has very good systems. So it may lessen the amount of time that any engagement may have to take place, but no, it won't affect your impact assessment.
Okay, I've got a question here which is about the approach that will be taken by supervision as a whole. So we hear a lot about supervision, but will the SRA's new approach to be supported regardless of the size of the firm? And I think the answer to that has to be a resounding yes. With the move to OFR, we are very keen to see principles and ethical behaviour embedded across firms and indeed across the individuals who work at firms and all the other sorts of entities that we're likely to be dealing with in the future. We want to support firms by focusing on risk and and compliance management in firms to help drive down risk. So it is our intention to be proactive and supportive and not reactive and punitive. So I hope that gives you some comfort out there about what we're intending to do.
Okay. Yep. I've got a question from, I think it's S. Anderson. As relationship management is not going to apply to all firms, is there a danger of different standards of compliance applying to different firms? First of all, the answer to that is hopefully no. The aim of the whole of the supervision structure is that there will be a consistent view across the whole of the SRA. One of the things that the new OFR and the movement towards OFR has done is to try and remove all the silos within the SRA. And it makes us, to help us make that we have a consistent approach, therefore. So no, the handbook is very much across everybody, for everybody to follow, whether they're short, small or large firms. And I think Amanda's going to talk about decision-making criteria.
Yes, I was just going to add in that the SRA as a whole has been undertaking a lot of work which had already commenced before OFR and is continuing now to ensure that across the organisation there are criteria in place that should, with the aim obviously of taking out inconsistencies and ensuring consistencies in decision making across the many different sections of the SRA.
Okay. Question here, I think Amanda's already come across this. Will the firm be told their risk score? The answer is no. It's not the plan for the SRA to publish firms' risk scores, but I think it is worth, firms with regard to their size, their turnover, their amount of client monies, etc., they may well be able to have a good idea as to whether at the end of the day they will be high risk, medium risk, etc. Okay, Amanda?
Yes, I've got a question here about time and resources. So given your limited time and resources, how would you commonly deal with a sole practitioner firm on an RM basis? Well, I think it's unlikely that a sole practitioner would be scored as high impact, although it is possible, of course, depending on the nature of the client base and perhaps the number of employees that sole practitioner may have. So I should think it's very unlikely that a sole practitioner would fall into a high impact firm. But if a sole practitioner did fall into the high impact score and was therefore being relationship managed, then we would carry out a similar sort of approach as we did with the sole practitioners we worked with in our pilot, and that was to meet with them, to understand their risk control and governance mechanisms, and to work with that sole practitioner to come up with a mutually acceptable time frame for engagement. Our experience in the pilot was that it actually didn't take us particularly long to gain a full understanding of sole practitioners' businesses, but clearly it's important for us to understand the different factors and commercial drivers that sole practitioners face apart from other types of firms out there in the profession, in order that we can react appropriately to the issues that sole practitioners face.
I think just adding on from that, Amanda, I mean, say that sort of sole practitioner could possibly, but I can think of a scenario where you have a sole practitioner who runs a company with probably about 200 or 300 lawyers working for him, and we have come across over the years instances like that. And because of the sheer size of the business, he may well fall Absolutely. As a sole practitioner into relationship management.
Absolutely.
Anyway, Cecilia has typed in, I think. I understand we are required to provide annual return information to the SRA. Will this go via relationship manager if high impact and what types will be required? Well, thanks for that, Cecilia. Yes, you are going to be having to prepare more information. I think the first date is going to be is October 2012, I think. I'm looking for nods, yes, I'm having nods around the room. Yes. It's October 2012, probably the first time you have to give this information. However, if you are in relationship management, that will be hopefully a lot earlier than that. And so, whilst we won't be actually the recipients of that information, we will be engaging with you, and hopefully we will have that information with you anyway. So, although it will have to all go to the authorisations department, etc., who will deal with that, we won't have direct information on that, but we can help, we can look at it. As for what types are going to be required, of course, the COLP and the COFA will be having to submit a return of what exactly the details of any breaches, etc. We also have the thing that there are other, these first-tier complaints you may well have seen that they're going to have to be reporting upon. So these are the sort of things that you're going to have to do, but it will be within the SRA as part of your renewal process. But we will be, hopefully, if you're in relationship management, we'll be getting that information as we go along anyway.
Okay, thank you, Martin. Right, I have a question here. It's about, I'll just read it out. It says, please explain the role of the regulator in assessing financial stability of firms, what levels are set, and at what level the SRA will take action, and what action the SRA will take if financial stability is in doubt. Well, just to explain that our interest in financial stability is really to understand what the financial position is of firms and to look at the controls and governance and internal reporting mechanisms are within firms to keep tabs on the finances, and that includes not only the control mechanisms around client accounting, but also looking at firms as businesses and the financial position that they're in. It isn't the role of the regulator to step in and prevent a firm from collapsing, but we do have an interest in making sure that if a firm is in financial difficulty and it needs to wind down or close, that that's done in a managed and orderly way in order to prevent the huge impact on clients that arises where, for example, a firm is abandoned or where we have to take fairly draconian powers and intervene into a firm. So our interest really is in understanding better what the financial position is of firms, assessing the extent to which the financial position of firms is well run or not, understanding the risks that the businesses themselves are taking and are prepared to take, and then working with firms to ensure that if they need to, that they can wind down in an orderly way, or to assess whether or not improvements need to be made in the control mechanisms and structures in place.
Okay, I've got a couple of questions here that are fairly shortish, so I'll do the two together. Janine has asked can you give any practical idea of the type of firms, relationship management, e.g. the top 100 or top 50? As I said earlier, that the senior management team are going through the process of defining what their levels of risk appetite are as to what constitutes high level or medium or low. So until we specifically know that, we will not be able to answer that question. However, you mentioned here the top 50 or top 100. It is likely to be much more than that. We're probably looking at over 200, 250. But until the senior management team have decided exactly where their risk bands lie and the resources to do that are brought in, we can't actually say the number of firms. Peter has asked, when will we know if we are in relationship management? You say phased, between when and when. Well, This is a very big question. Obviously, we would love to be able to sit down on the 6th of October this year and send out 200 or 300 letters saying, I'm coming to see you next week. That is just not going to happen. We are going through we're a small team at the moment and we are recruiting, so it is going to take time, and it would be wrong of me to say that you will have a letter between that month and that month. It could be as much as 6 months or so before you get to see all the firms that are actually contacted and visited. But again, I mean, that is just my guess as it is at the moment. Thank you.
Okay. I've got a question here which is asking, how do you assess the risk prior to meeting with firms? Well, as I was talking about earlier, we're going to be assessing the impact that we think firms pose to our regulatory objectives, and that's going to be based on the size of a firm, the nature of its clients, the extent to which those clients may be vulnerable or unsophisticated, the number of staff employed by a firm, etc. And that's information that we currently hold, and we can also have other information that we can factor into our impact assessment. And then it's for the relationship managers, when we actually attend at a firm, to gather information from you and to discuss with you what your risk and control mechanisms are for us then to make a detailed assessment when we actually get there. So it's the impact that we're assessing prior to going out to firms, and then we can actually assess the likelihood of any risk crystallising when we're actually out and meeting with you at your firm.
Stuart asks, do you think that professional indemnity insurers will want to know the result of the impact test carried out by the SRA? Alternatively, do you think that PI insurers will want to know how much relationship management a firm has when formulating its quote? How will the SRA deal with this? Well, first of all, quite simply, the matter of what the score is, the impact scores, will not be known to the firm, and hence it won't be known to the insurers. Alternatively, the amount of relationship management time, it has no one firm who is very high impact may have very little time because their systems in place are adequate, and we're quite happy with what's going on. However, a similar sized firm with similar systems may have complex issues which wouldn't affect necessarily the PI insurance. So I don't think that is going to be much of a pointer for the insurers. So I hope that's answered the question, Stuart. Amanda.
Okay, I think we've got time for one last question. So we have a question here about how relationship management will deal with ABSs. Well, we're waiting to see what the ABS regime brings to us, of course, but it is likely that some ABSs will be assessed as high impact, and some may not be. An ABS could take many forms, as I'm sure you're all aware, and so it would be the same sort of impact criteria that are applied to ABSs as to the current members of the profession. So we would expect that we would apply the same approach to ABSs in terms of our supervision going forward as we do to the rest of the profession. So if an ABS is scored as representing a high impact, then it will be dealt with by relationship management, and if it is assessed as representing a medium or low impact, then it will be dealt with by supervision. Okay. Oh, and we'd just like to say sorry again very much for the background noise and any inconvenience that this may have caused you. It has unfortunately been out of our control, and we've done our best to talk up. Okay.
Right. We're now at the end of this webinar, and Amanda and I would like to thank you for your participation and hope that you found it useful. If there are still some questions that you've got, please feel free to contact us by email at relationshipmanagement@sra.org.uk. And for those of you who are claiming your CPD points, today's code will now appear on the screen. And thank you very much indeed, and look forward to hearing from you in the future. Bye now.
Thank you. Bye-bye.